Welcome to Indices, and here we're looking at the US notes, and the US notes and the bonds are moving down fairly rapidly, and this is good for support for stock, for indices. This market here has still got further to work down, and it also looks like it's working in 5 waves. We know we've got wave 1 here. This is the 1, 2, 3, 4 and 5 to here, or we've got 1, 2, 3, 4 to here to complete this 5th wave here. So we're looking down at 124, and then we're looking for a bounce off here in 3 waves, coming back into supply, probably the 125 here, and then move lower from that point there. The daily is oversold. The momentum is still to the downside on this, but the main point here is that it's giving us some support for stock, and we'll see higher here for the S&P 500. I thought we may have had wave 4 to here and we'll be pushing higher from here, but it turns out that we've got the A, the B and the C, just a bigger one, and that's the trouble with wave 4s. They can get a bit complicated. Mind you, not that this is actually complicated, it's still in 3 swings, so we should see a break above the 126 high here, and of course our target is the next level, which is the 1930, but technically anything above here would be suitable for that move higher. Also, we've got the ADP figures coming out tonight, and normally whatever result they are, the non-farm payroll figures on the Friday will be in line with the ADP figures. So whatever happens tonight will give us a really good lead into what we can expect on Friday. And normally what happens on Friday will follow through on the Monday. So that's, a really good sort of set of flags to swim between. The US have got trade balance tonight, and also their non-manufacturing figures as well. Australia's got the GDP too at 12:30 today. The Dow Jones is the same as well. And we've been sort of focused in on here. I'll just come back to this low here at 16,334 or something. But basically a nice swift wave 1 up here, wave 2 back. And we've been tracking wave 3 to here. I'm being conservative here in saying the 1 and the 2, the little 5 waves up here for 3, 4 and 5. Extension in the 3rd makes 1 and 5 about the same length. Wave 4 here that we've been working with, it's a little bit dodgy here. I wasn't sure to put it here or to here. So not that it matters that much. We're still looking at this as 1 and 2 and 3 and 4 and looking for 5 to the upside. So as long as this market stays above 16,700, we can start looking at 16.8, but important figures here, the midpoint, the 1750 of course, and also the 16,772 will be the point that you trade to on that side there. Once again, all this needs to do is make a new high above here, and it doesn't even have to do that really. It just needs to produce 5 waves here. It can be a truncated 5th wave and fail, unfortunately. But still, look, the thing is that you can see these markets are edging higher, but they're not really trending as such. So. And number 8 here is a profit-taking number, so we can expect that. And that will line up with the DAX at 10,000 as well, which it has been for a little while and struggling into here. We're looking at wave 4 here. The wave 4 pullback in here for this is back at 98.33 here now. We can pin that in there, but at the same time, if the S&P 500 is going to push higher, then we can pretty much put that little wave 4 in there, because we do have a 3-wave price action here in terms of an A and a B and a C here. So we could just push up from there. If you're trading long here, you would need 99.30, the top of group 1, to trade long to 10,000, taking out this high here. But just be mindful if something comes out of left field. I don't think there's anything on the Europe side of things that can rock the boat too much. I'm just checking as I talk. Just the G7 meeting, of course, something can come out of that, or the GDP revised could come out of that as well around 8 p.m. So just keep an eye on that. And the final PMI figures too for Europe too can come out. So look, a little bit headline driven, but as far as we're looking here, that we're looking to the upside, and 99.30 is that set up to the upside. Otherwise, we could have another low in here because the 38.2 retracement down here. But it will follow the S&P 500, well, from lunchtime anyway, of course. The FTSE, right, this is tricky little sucker, this one here. I know that this move down through here is corrective, okay? So I know eventually we'll take these highs out here. So I was assuming that this would be a wave B here, because not that this is very clear here, but it does appear to be a 5-wave structure here, and this would be the A, the B, and the C here. So then we'd naturally look for 5 waves to the downside in terms of 1, 2, 3, 4, and 5 here, and then a move up through to here. And that seems to be going okay at the moment. It's just a little bit, not getting the perfect picture in terms of 5 waves down as such. In fact, it just looks like we've got 3 waves down here, doesn't it? It looks like we've got sort of an A and a B and possibly a C to here, but this may not be finished here. We may be looking at 1, 2, 3, back 4 here and down for 5 here, such just to finish that, just to finish the 3rd wave here. Then there would be the 4th and the 5th here. This is kind of important because the Australian market too, the ASX 200, is likely to follow the same path here as well. So if this balance line here, the midpoint, the 50, becomes support here, then I've made a mistake and we'll be going higher from that point, okay? So that's the thing to watch, and it could do that. It could follow the DAX and the S&P 500 higher. That's logical. Doesn't do it always, but does most of the time, I guess. But well, depending on how strong they're moving, So look, that 80-50 is a real line in the sand. Support on that makes this an A and a B and a C, and we'll take that high out from there. But otherwise, we need to be looking at this particular structure through here. And if the 80s, 68.20, the pivot is always number 2. If 2 becomes the resistance, then it'll be going further down, and then you'd have to wait for 2 to become support again on top of 3 to add again as well, and so forth, to move to the upside. So we'll see what occurs within this little space here. So I can't give a clear path here right at the moment for this. And the ASX 200 is also like this as well, a little bit of a unclean path, but in one way or another, as you know, we'd always been waiting. We'd traded up to this point, I think, and then we just basically waited for all of this, and really still like waiting. We never really got our support on top of 53.30, which would have given us the long trade to the upside. But we figured that we'd be getting an A, B, and a C correction. I thought that we had it here in terms of an A and a B and a C, but it's not the case. So we need to enlarge this here. So this would be the B wave here. This would be the wave 2. This is the 50% is the top, 61.8% is the bottom of that circle. And then would be looking at wave C here and wave A over here. So basically an A and a B and a C. It can come down further. We're going to look at that in a moment. But a couple of important points here is that this particular structure here is in 3 waves, okay? So it doesn't matter what happens here, it's all corrective. It's all corrective. So we should eventually find support here and move up from that point there. On the ASX 200, this particular move down through here doesn't appear to be such as a very sort of like here. It's quite clean that there's a 3-wave structure here. On the ASX 200, it's not quite there. So I'm going to focus on that as well. But as it stands, an A wave, a B wave, and a C wave. And the C wave is normally always is, except in triangles, is in 5 waves. And we were looking down around this level here. We know group 2 is a strong support area as well here. So 65, 72 on the 80, and we can see that bouncing off there. But this is the structure that we're looking for here. And is that complete yet? Well, this is it just here. So we've got the A, the B, nice 3 wave for the B here, and the C wave here. So we've got this here. This is our sort of saving grace, that we know that we're in a corrective move here, and a little bit haunting really, because the wave C here should be more lazy than the wave A. Wave A should be the sharpest. Wave A should be the sharpest, and wave C should be on more of an angle like this here. That tells me that it's like strong. This tells me it's weak, of course, you know. So what we're actually looking for here is 5 waves in the C wave here. So do we have that? Well, I'm not quite sure, but we can have a bit of a squizzy in here. And it's also difficult to work out as well. I mean, in a bit of a nutshell, if I had to look at this and get into the guessing game, this would be 1 and 2 here, the 3rd wave, the 4th wave, which can get a bit complicated, and the 5th wave down through here. The 4th wave would pull back, the 38%, so pretty much spot on where it is there as a 4th wave retracement. So we can have that other move down through here. I don't really know what to I can't give you a clean call on the market, except if the 5,500 became the support at some time, in the next 24 hours or whatever, then, definitely want to build the long trade in from that point there. And, don't take my word on it. This can move down here. I'm just sort of guessing, the 5 waves may already be in here as such, in terms of 1, 2, 3, 4 and 5. It's just that this is a better fit as such. Anyway, let's see what comes out of the gate, and the GDP figures at 12:30 will be the will be the catalyst for that sort of short-term sort of push in that particular direction. Have a look at the market depth in BHP and CBA. Actually, just want to check here for. Yeah, just check the market depth on those before the market opens. It'll give you a good lead in to where we are. The futures market and the CFD are trading at the same price, and let's just have a look at the cash market, see where that closed. I think it was 79. Sorry to do this work on the hop. Yeah, 79. And the other sort of haunting thing about this, I guess, is that we've got increased volume here as well, in terms of this little move down through here was on higher volume. This move back up here, retesting supply, was on lower volume, so weakness. And this move down through here was on higher volume. So, it's got that sort of bias of moving down further, and the 61.8 on the cash is around the 54.30 sort of area here. So, we can get further downside from here. So just be mindful of that. And what's today? Wednesday. Wednesdays can be down in the morning and up in the afternoon. Thursday's bear day, and Friday and Monday the bullish days. So let's see if they sort of play out in that style. All right, cheers.